Hey everyone, welcome back to Corporate Decoder. Today PFIS just filed a current report detailing their annual shareholder meeting, and I am seeing a key vote that gives us a look under the hood. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is the shareholder approval of an equity incentive plan amendment, which often tells us about management's plans for growth and employee motivation. People's Financial Services Corp, or PFIS as it is known by its ticker symbol, had its annual meeting of shareholders on May 22nd, 2026. This Form 8K is essentially a report card of what happened at that meeting, focusing on the votes that took place. One of the most significant items on the agenda was an amendment to their 2023 equity incentive plan. Think of this plan as a way for the company to give its employees and directors stock options or other ownership stakes. The main change here was to increase the number of shares of the company's common stock that can be issued under this plan. So, what does this mean in simple terms? The company is essentially making more stock available for things like rewarding employees for good performance or attracting new talent. The amendment bumped up the maximum number of shares that can be issued from this plan to 300,000. This is important because it shows a potential for future stock-based compensation, which can be a signal about how management sees the company's future prospects. If they expect the stock price to go up, giving out stock becomes a more powerful incentive. This plan isn't just about handing out stock freely, it is a comprehensive tool that can include stock options, which give the holder the right to buy stock at a fixed price, restricted stock which vests over time, and other cash or stock awards. The goal here is to align the interests of the employees and officers with those of the shareholders. When employees have a stake in the company, they are more likely to work towards increasing its value. It is also worth noting that while the board of directors and especially appointed compensation committee have broad powers to manage this plan, they can't make changes that would hurt existing award holders without their agreement. This provides some protection for those who already have awards under the plan. Now let's dive into the actual voting results from the annual meeting. Shareholders had several key proposals to vote on. The first was the election of 4 directors to the board. These directors are elected to serve until the 2029 annual meeting, meaning they have a significant term to oversee the company's strategy. Looking at the director elections, we see a pretty strong showing of support for all 4 nominees. For example, Sandra L. Bodnaik received over 5.7 million votes in favour, while only about 124,000 were against her. This high level of approval suggests that the shareholders are comfortable with the current leadership and their direction for the company. The significant number of broken non-votes here, over 1.7 million for each nominee, indicates that some shares held in brokerage accounts were not voted by the beneficial owners. Next up was an advisory vote on the compensation of the company's named executive officers. This is often called a say on pay vote, and it allows shareholders to voice their opinion on how the top brass is being paid. The results here showed a majority for approval with over 5.6 million votes in favour. This indicates that, generally, shareholders found the executive compensation to be reasonable. Then there was a vote on how often these say on-pay votes should happen every year, every 2 years, or every 3 years. The overwhelming majority of shareholders, over 5 million votes, chose to have this vote occur every year. This demonstrates a strong desire among shareholders for ongoing oversight of executive compensation. And here is where we get back to that equity incentive plan amendment. The shareholders voted to approve the increase in the number of available shares under the plan. This proposal passed with a substantial majority, over 5.3 million votes in favour. This is a positive signal that the company's growth strategy, which may involve using stock-based incentives, has the backing of its investors. This vote is particularly interesting when you consider that PFIS has a market cap of around $600 million and about 547 employees. Increasing the share pool suggests they might be planning to expand their workforce or offer more significant equity grants to key personnel as they grow. Finally, shareholders also ratified the appointment of Baker Tilly US LLP as the company's independent registered public accounting firm for the fiscal year ending the 31st of December 2026. This is a standard procedural vote and it passed with nearly unanimous support. Over 7.4 million votes in favour. This reassures us that the company's financial reporting will be overseen by an independent auditor. The filing also includes a list of exhibits, with Exhibit 10.1 being the actual amended People's Financial Services Corp 2023 Equity Incentive Plan. This is where you would find all the nitty-gritty details if you wanted to read the full plan yourself. The report is signed by James M. Bone Jr., CPA, who holds the position of Executive Vice President and Chief Financial Officer, and Principal Financial Officer. This confirms the authenticity of the document from a senior financial executive at the company. Looking at the bigger picture, People's Financial Services Corp is a regional bank, and with a PSI-E ratio of around 10.2, it seems to be trading at a reasonable valuation compared to its earnings. The recent news headlines mention upcoming dividends and investor presentations, suggesting the company is in a stable period. Focused on returning value to shareholders and communicating its strategy, the shareholder approval of the increased equity incentive plan, coupled with positive votes on director elections and executive compensation, paints a picture of a company where management and shareholders are largely aligned. This alignment is crucial for executing any long-term growth strategies, especially for a company in the financial services sector that relies heavily on talent and market confidence. The clear approval of the equity plan signals management's intent to use compensation as a tool for future growth and employee retention, which is a positive sign for any company looking to expand. What I'm actually looking for is how these increased shares will be deployed, and if they lead to tangible growth in the coming years. Alright, that is our breakdown of PFIs. Latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. That is my take. Stay decoded.